Okay, let's go over our weekly market recap for June 17th, 2024. Our market headline number one is stocks continue to make all-time highs. The last 7 out of the 8 weeks have been up for the tech-heavy NASDAQ and the S&P 500, while the Dow Jones, which is led more by financials, is actually lagging for the partial second quarter and actually coming in negative versus the S&P and the NASDAQ. Market headline number two from last week is inflation is easing. The consumer price index came in on a 12-month basis at 3.3. They were expecting 3.4. So there was no change on the month over month. Bottom line, the market believes the Fed is providing this soft landing, and they will cut interest rates 1 or 2 times this year. And here is the chart of the yields. Looking at 1 year all the way up to 30. And as you can see, since here last 5-6 weeks, yields have been coming back down. However, this is an important chart. This is looking back through the 1900s at the times that we went through higher inflation, and all the last 3 periods, we did not just go through it once. We went through it multiple times. So there's bounces and waves of inflation. So if history is our guide, we may have won the battle for right now, or the Fed may have, but we are still not out of the war, and we shall see what happens heading into the second half of this year into 2025. All right, top 3 market movers for this week is all week we get lots of the Fed officials. They're scheduled to speak, so they will be justifying what they did at their last meeting. Tuesday, we get retail sales, which will take a look at the consumer. And then Friday, we get existing homes, take a look at the housing market, and then we get the leading economic indicator for May. Wednesday, the market will be closed for Juneteenth, the National Independence holiday. All right, here's a listing of the corporate earnings. Not a lot this week. We get a couple home builders and Kroger, Darden, and CarMax to wrap out this week. All right, let's take a look at the short-term chart of the S&P 500. As you remember, we started adding back on May 6th, and so far so good. Most of that is being led by AI and technology. That is the sector of the market that is pushing the S&P 500 and pushing the NASDAQ higher, as I explained earlier. So there is some strength, and so that is a good thing. And we will be about a couple weeks, 2-3 weeks into earnings season, and we'll see if that now is supportive and see if those all-time highs can remain. All right, let's take a look at the bond market. We started going back positive on bonds on May 3rd, and so far so good. It's been a battle this year, and it just finally broke to the positive. It's been negative all year long on the aggregate bond, and now it's slightly positive. We do have this area of resistance, so that we are going to have to break through. And so if we want to see these bonds continuing to go higher, we're going to have to break through there and convincingly. That's it for this week. Thank you for joining us. Our next update is Monday, June 24th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.